If you're still taking everything from your company as salary or dividends, you're missing one of the easiest wins in tax planning. Smart directors don't just take money out, they use their company to pay for things that improve their life. Cars, phones, insurance, well-being. Yes, they're taxable, but usually at far lower rates than income tax. And right now, the biggest opportunity is electric vehicles, with benefit in kind tax sitting at just 3% for 2025. View how company perks really work, what counts as a benefit, how to use them legally, and how to turn your company into your lifestyle engine without crossing a line. A benefit in kind, or BIK, is any non-cash perk you receive from your company that has personal value. HMRC treats it as income, but here's the key difference. You pay tax on the benefits value, not the cost to the company. Your company, meanwhile, usually gets to deduct the full cost as an expense. So if it's structured right, you enjoy the benefit while your company reduces its corporation tax bill. Think of it as shifting lifestyle costs into the business legally, efficiently, and strategically. The EV advantage and how company car rules actually work. Let's talk about company cars because this is where the tax system quietly rewards directors who understand how it really works. A company car is exactly what it sounds like, a car provided by your company that you're allowed to use privately. The moment there's any personal use, even driving at home, it becomes a benefit in kind. HMRC doesn't tax you on the whole cost of the car. They tax you on a percentage of the car's list price called the P11D value. That percentage depends on two things, the type of fuel it runs on and its official CO2 emissions rating. For fully electric cars, that percentage is currently just 3%. For hybrids and petrol or diesel cars, it can range anywhere from 15 to 37%. So if your company buys or leases a 50 grand electric car, HMRC says only 3%, that's £1,500 is a taxable benefit. If you're on basic rate, that's £300 a year in tax. Even at the higher rate, it's £600 a year. Meanwhile, the company can claim corporation tax relief on lease payments or capital allowance if it purchases the car outright. Deduct insurance, servicing and maintenance costs, pay a small class 1 NI charge, about £200 a year. So for roughly £800 all in, you're legitimately driving a 50 grand car. A few rules to keep it clean: the car must be registered to and owned or leased by the company. Fuel for private use is a separate benefit, but electric charging at the office or at home on a company installed charger is tax free. If you reimburse the company for private mileage in a petrol or diesel car, it reduces or removes the taxable benefit. But with EVs, that's usually not needed because the BIK is already minimal. You can include spouses or directors as users, but each individual benefit has to be reported separately on the P11D. Where people get caught out is trying to buy a car personally and run the costs through the business. That's not a company car. That's a disallowed expense. The golden rule is, if the car belongs to the company, and you're simply taxed on the privilege of private use. And right now, that privilege costs almost nothing if you choose electric. That's why we're seeing clients replace their personal leases with company-funded Teslas, BMW i4s or Polestar 2s, saving thousands a year while the business claims full deductions. It's one of the few incentives HMRC hasn't ruined yet, and if you're a limited company director, you should absolutely take advantage while the rate stays at 3%. Private healthcare and dentistry. Let's talk about one of the smartest and most realistic perks you can run through your company right now. Private healthcare and dental cover. Let's be honest, with the state of the NHS, healthcare isn't just under pressure, it's collapsing. You can't get GP appointments and most people can't even get on the list at an NHS dentist anymore. So for directors, private medical and dental care has gone from a luxury to a necessity. The good news, your company can pay for it legitimately. Here's how it works. When your company pays for your medical or dental insurance, Bupa, Vitality, AXA, Denplan, it's classed as a benefit in kind. That means you personally pay a small amount of tax on the value of the benefit and the company pays a bit of Class 1A national insurance. But the company also gets corporation tax relief on the full cost of the policy. So instead of paying for private cover personally, after you've already paid tax on your income, you can fund it through the business pre-tax while claiming relief. Let's say your healthcare and dental policy together cost £1,200 a year. you pay tax on £1,200 benefit in kind. That's £240 if you're a basic rate payer. The company pays around £170 in Class 1A NI, but saves roughly £228 in corporation tax. You get faster treatment, peace of mind, and it's funded by the company rather than your personal account. Just like with healthcare, the paperwork matters. The policies must be in the company's name, the benefits must be reported on your P11D, and the Class 1A NI must be filed and paid correctly. That's the kind of thing we manage for clients every month at Tax for Pros, making sure you're using the system properly, claiming the relief, and staying compliant while you do it. Because in today's climate, with NHS waiting lists and dentist shortages, private medical and dental cover through your company isn't a perk anymore, it's protection. Now let's talk about one that people always ask me about, gym memberships. Everyone's heard, just put your gym through the company, but here's the truth. Most of the time, it doesn't make tax sense. A gym membership is only tax-free when it's part of a staff-wide welfare programme, meaning it's offered equally to everyone in the business, not just you as the director. So if it's just you, that gym membership becomes a benefit in kind. You'll personally pay tax on the full cost. The company will pay Class 1A national insurance. And yes, the company gets corporation tax relief, but by the time you combine the personal tax and the company NI, it's usually cheaper just to pay for the gym personally after dividends. Where it does make sense is when you're running a team. When the company covers memberships for staff as part of a wellbeing policy, it counts as an allowable staff welfare expense, not a personal benefit. So here's the rule. If it's just you, keep it personal. If it's company-wide, make it a perk. That's why working with professionals like us at Tax for Pros matters. We don't just tell you what you can claim, we tell you when it actually makes sense to claim it, because there's no point saving £1 in tax if it costs you £2 to do it. So before we wrap up, let's run through a few of the smaller but seriously valuable tax deductible perks that most directors completely overlook. These aren't benefits in kind, they're tax-free company expenses as long as you follow the rules. Trivial gifts. You can give yourself or any employees small gifts worth up to £50 each, up to 6 times per year, completely tax-free. As long as they're occasional and not cash or vouchers that can be exchanged for cash. Think flowers, hampers, meals or small surprises, but never regular rewards. The annual staff event exemption allows £150 per head per year. Completely tax-free for Christmas parties, summer barbecues or any staff social. That £150 covers everything: food, drink, venue and entertainment. It just needs to be open to all staff, not just directors. Eye tests and glasses. If you or your staff work with screens, eye tests are fully deductible and not a benefit in kind. HMRC treats them as a health and safety requirement. Glasses or contact lenses are only tax-free if they're prescribed solely for VD use. If they're for general use, they're personal, so don't run those through the company. It might not sound like much, but these small wins add up fast, hundreds or even thousands in savings each year, and they show the difference between a company that's compliant and one that's strategically managed. That's what we do at Tax for Pros. Make sure every allowable perk, deduction and exemption is used properly, documented cleanly and reported correctly. So when you add all that up, the electric vehicles, the private healthcare, the eye tests, the small gifts, the staff parties, it's not just about saving a few pounds here and there. It's about building a business that quietly pays for more of your lifestyle while staying 100% compliant. These are the small strategic moves that separate business owners who survive from business owners who actually build wealth. If you want to get the foundations right, what you can claim, how to pay yourself and the smartest ways to extract profit, start with our tax game plan. The link's below. It's your step-by-step guide to getting the basics right from day one. Then when you're ready to go deeper, join our YouTube membership. Inside we cover advanced planning, multi-entity structures, group relief, director level strategies, and you decide what topics we tackle next. And if you'd rather have it all handled for you, the structure, the P11Ds, the compliance, the monthly monitoring, book a call with our team at Tax for Pros. We'll make sure every perk is used properly, every deduction's documented, and every part of your business works the way it should. For you. Right, now, only about 14% of people who watch these videos are subscribed. So if you're still here, clearly you're serious about building wealth. So hit subscribe, download the tax game plan, join the membership, and let's make your business work harder than your tax bill ever will. I'll see you in the next one.